You've probably seen hundreds of videos about the power of three. It's the same thing everywhere. Accumulation, manipulation, distribution. But if you've tried to trade by the book, you know that most often you get RR 1 to 2, and half of your trades turn into nervous waiting. Will the price reach the take profit or reverse halfway there? After analyzing this model for over a year, I noticed one simple pattern. It does not break the classic Po3, but it makes the entry more accurate, the stop almost a third shorter, and raises the average RR to 1 to 3, 1 to 4. In this video, I'll show you a modified version of Power of Three. The basis remains the same: accumulation, then liquidity grab, then distribution. Only a small technical rule will be added, which turns the theory from pictures into a real working intraday setup. In a few minutes, you'll have a step-by-step algorithm, a live example on the chart, and clear criteria for catching such trades almost every day. Let's go. Well, we'll start with the basics, so you can really understand what we're talking about. Power of Three is a model that describes how a market maker works during the day. The day is divided into 3 phases. First, accumulation, the phase of accumulating liquidity and waiting. This is usually the Asian session and the first half of the London session, when the market is range-bound and seems to be gathering future stops. Then comes manipulation, a sharp move up or down that knocks out stops and provokes traders to enter on the wrong side. And only after that comes distribution, the real movement, which is the whole point of the model. It is in this phase that we look for an entry point. It looks simple, but there is an important condition. Po3 only works within a single trading session. This means you need to set the time on the chart correctly. Set trading view to New York time, UTC -4. This is the time used by the main algorithms, and key levels are formed based on it. Now that everything is set up, you need to mark 2 zones: the opening of the day, 0 o'clock EST, and the opening of New York, 8:30 EST. The first shows where liquidity flows from the start of the day, and the second shows the moment when the market truly awakens. Volumes appear, algorithms are activated, and real movements begin. We mark 0 o'clock and 8:30 ST for a reason. These zones serve as reference points for the entire model. 0 o'clock is the start of the day. From this line, you can see where liquidity is being taken from the start of the day, higher or lower. This helps to understand where the market will look for stops. 8:30 is the opening of New York, the moment when volume enters the market. Very often, it is at this time that manipulation begins, a sharp movement up or down. In the Power of Three model, we look for an entry point near one of these marks, immediately after the manipulation. If the price returns to 0 o'clock or 8:30 after the liquidity grab, this is a signal. Distribution begins. That's when we enter the trade. In other words, these 2 zones are not just lines on the chart. They are markers that help you catch the key moment and not confuse the phases of the model. Now let's go through the whole process, from midnight to exiting the position, so that you can open the chart tomorrow and repeat it step by step. When I trade using the Power of Three, I start from the very beginning. I set a mark at 0 o'clock EEST. This is not just a formality. It is a reference point that shows where liquidity flows from the start of the day. My task is to see where the market maker is going to strike, and for that, I need to wait for the real players. That's why the second mark is at 8:30 EST, when New York opens. It is from this moment that the market wakes up, volumes turn on, money comes in, and the real struggle begins. And this is where the most interesting part begins. I don't rush into a trade at 8:30. I wait. I watch to see where the first sharp move will be. That's the manipulation. The price may sharply break through the high or low, and it's important not to give in to the temptation to jump in right away, because it's at moments like these that the crowd is already in, and smart money is just setting the trap. I'm not looking to enter during the manipulation itself. I wait for the return. As soon as the price returns to the opening zone of the day, or to 8:30 AM, I understand that the move was false, that the market has tested liquidity and is now reversing the scenario. At this point, I switch to a lower time frame, M5. This is where my refinement begins. In classic Po3, the entry is something vague. After manipulation, when the movement begins. But I was looking for something specific. I needed a clear, repeatable rule, and I found it on the lower time frame. As soon as there is a return after manipulation, I don't just jump into the market. I wait for the first fair value gap to appear on M5. It is this gap, like an imprint of the algorithm, that shows, yes, there was momentum here, and now the market maker can give a pullback. Moreover, I don't enter the trade immediately after the appearance of FVG. This is important. I wait for the price to first return to one of the key zones, either to the 8:30 New York opening mark or to the 0 o'clock daily opening. Only if the pullback happens there, I consider that the context has been preserved, that the market has not gone into chaos, but is acting according to the scenario. And only after that, a retest of my first FVG. That's when I enter. Not before. This approach cuts out false signals, where the impulse shot up but did not receive support. I work according to a scenario where each element is confirmed. There is manipulation, there is a return to the zone, there is a reaction to the FVG. Everything step by step. If this model seems complicated to you yet, that's normal. Trading with Po3 requires time, observation, and backtesting. And if you decide to watch the market from the sidelines for now, that's a wise decision. But that doesn't mean your money has to sit idle. That's what MiloBot PRO is for. An expert advisor that trades fully automatically using its own algorithmic system. It is not a smart money bot. It does not interfere with your manual trading, does not require configuration. It just works in the background while you study Po3 or test your strategy. In 4 years, the account where MiloBot works has grown from $34,000 to $272,000. Everything is transparent. The statistics are open on my FX book. You can check everything yourself. Want to see for yourself? Download the free demo version, test it, and see how the bot trades. The link is below this video. And now, everything you need to trade Po3 Plus on your own. My checklist, which I keep in front of me every day. Put it next to the chart and follow the plan without guesswork. 0 o'clock ST, mark the opening of the day on the chart. Asia box, mark accumulation, don't touch anything else. 8:30 ST, wait for New York to hit with volume. Manipulation, see liquidity grab, mark manipulation. Return to 0 o'clock or 8:30. Filter, trap closed. Switch to M5, mark the first FVG after the return. Pull back to the middle of FVG. Limit entry, not earlier, not later. Stop strictly behind the tail of manipulation. Take minimum 1 to 3. This checklist is your action plan. Follow it step by step, and the power of 3 will stop being a theory from pictures. It will become part of your trading system. In the next video, we will analyze ICT Turtle Soup and show you how to distinguish a real setup from a trap, where to place a stop, and how to take advantage of the movement immediately after liquidity is removed. Subscribe so you don't miss it. And if the video was helpful, give it a like and write in the comments which model you want to analyze next.